Hello friends, good evening to all of you. And now the next topic, it's about the SLR, that is a statutory liquidity ratio. It's about the SLR, that is statutory liquidity ratio. Again, very much important now in this case of the statutory liquidity ratio. First of all, it is defined under what section? It is defined under section 24 of the Banking Regulation Act. Again, the banks are to maintain SLR in the form of the cash, or in the form of the gold, or in the form of the approved government securities. That must be unencumbered securities. The banks are to maintain the SLR. Now, it is not necessary that you have to maintain the cash with the Reserve Bank of India. No, nothing like that. But just you need to maintain the cash. That's it. So that's the statutory liquidity ratio. So a percentage of the net demand time liability is to be maintained in the liquid asset. That could be cash, gold, or the unencumbered approved securities. When I'm saying unencumbered approved securities or government securities, it means no charge must have been basically be there on the government securities, right? So would you be earning interest over the SLR? Because I told you that in case of the CRR, no interest was paid. Similarly, as such, there is no interest paid on the SLR balances. Let's say if you're maintaining the cash, you will be earning no interest over it. But the point is that if you are investing the amount in the SLR securities, then there you're going to earn the interest, right? So that's the point related to it. So the maximum ceiling for the SLR is 40%. There was no ceiling or floor amount or percentage which was related to the CRR, but there is a ceiling amount prescribed for the SLR, and that is 40%, right? So it can be maximum of 40%, but not more than that. And further, then it's about the that you can be earning some interest over it. So let's say if the particular SLR is increased, then the lesser lendable funds will be available with the bank, and for the lesser money supply will be there in the market. So this is how the Reserve Bank of India controls the money supply. Clear with it? And now this SLR is to be maintained on daily basis. Like at the end of the day, it is to be maintained, and it is to be maintained based upon the NDTL of the last Friday, based upon the NDTL. So whatsoever the net demand and the time liability, same definition of the NDTL is there. So whatsoever the NDTL was there on on last Friday of the second preceding fortnight, on second preceding fortnight, right? We are to maintain the SLR balances based upon that. And RBI can increase the SLR up to the amount of 40%. So what would be the different components? The component is like cash in hand. It's like gold owned by the bank or balance with the Reserve Bank of India. Like if you're having the excess of the CRR, that will be amounting for the SLR. And also you can be investing into the unencumbered approved securities, right? Clear with it? And further, what about the impact? Let's have a look at the impact. So what will be the impact of the SLR? So like I told you, like higher the SLR is there, let's say higher the SLR, it means lesser lending will be there because lesser lendable funds will be available with the bank. So we can say lesser lending will be there, and that will lead to lower liquidity in the market. Understandable? And on the other side, if we say lower SLR, that will be leading to what? It means more lendable funds are available with the bank. So more lending will be there. And if more lending will be there, there will be higher liquidity in the market. There will be higher liquidity that will be there in the market. Clear with it? And also, if you're not maintaining the SLR, then there will be a penalty that will be imposed to you. Now, the CRR was to be maintained on the fortnightly basis. So there will be talking about that if there is shortfall on fortnight basis, right? But the SLR is to be maintained on daily basis. So if there is default for the first day, then will be the penalty of bank rate plus 3% will be charged. 3% per annum will be charged. Now, if it continues, then it will be 5% plus the bank rate. That will be the penalty will be charged for the shortfall amount, right? And in case of the CRR, the return which was to be filed was Form A. And for the SLR purposes, the return which is to be filed is Form 8. And this is to be submitted on monthly basis. The CRR report was to be submitted on after 7 days, like on alternate Fridays, it was to be submitted. But the Form 8 is to be submitted on monthly basis. To whom it is to be submitted? It is to be submitted to the Reserve Bank of India, and it is to be submitted before the 20th of the next month. Submitted to the Reserve Bank of India before the 20th of the next month. And then it's related to the liquidity adjustment facility. Now, what is LAF? It is basically the tool that is available with the Reserve Bank of India so as to manage the day-to-day liquidity. Liquidity adjustment facility that the RBI wants to adjust the liquidity. And here the RBI use two tools. One, it is related to the repo, and the another one it's related to the reverse repo, right? So these two tools are used by the Reserve Bank of India so as to manage the liquidity, so as to manage the day-to-day liquidity, right? So if the bank uses the repo, that's basically going to do what? Basically, repo is that particular rate at which the RBI lends money to the banks. So here we are taking the case of the Reserve Bank of India, and here we are having the bank A who is having the excess of the government securities on which no charge has been created, that those are unencumbered, right? So bank will be placing these securities with Reserve Bank of India with the promise that the bank is going to buy back these securities on a certain, after some certain period, right? And further, based upon that, the Reserve Bank of India will be lending the amount to the bank, right? So bank will be lending the amount to the bank so the bank can be managing its liquidity. And further, the securities will be placed with the Reserve Bank of India, right? So that's the process related to it. So it's kind of the lending which will be done by the Reserve Bank of India to the banks against the government securities, right? Now, when this will be done, the money will be absorbed from the market. So in case of the repo, the money is absorbed from the market. Just simply learn this particular concept. You just need to memorize this particular thing. When basically when basically sorry, the not the money is not absorbed, sorry, I told you differently. So when the bank RBI is lending the money, there is more money in the market. There is more money in the market. Rest all the concept is all clear, that the bank is to place excess securities with the Reserve Bank of India, and RBI is going to lend the money. And when RBI is going to lend the money, there will be more liquidity. There will be more liquidity. So we can say there will be in basically more liquidity in the market. So repo means more liquidity in the market. Clear with it? And when we are talking about the reverse repo, it means there will be absorption of the money supply from the market. There is absorption of the money supply from the market. So LAF is basically used so as to monitor day-to-day liquidity, and further RBI is lending funds to the banking sector through the repo, and RBI is absorbing the deposits from the banks, uh, absorbing the money from the banks using the reverse repo, right? So this sale and purchase of the government securities with an agreement so as to sell back or repurchase respectively, that is basically said to be what? That is said to be the liquidity adjustment facility. Clear with it? Are we clear with this thing? And this basic LF is conducted on overnight basis. This is conducted on overnight basis, like for 1 day facility it is there. And for the all the banks who are maintaining the SGL accounts, those can be entering into the repo reverse repo transactions with the Reserve Bank of India. There is no physical transfer of the securities as such, right? And the minimum bid size in case of the LAF, it is 5 crore rupees. It is 5 crore rupees. So that's about the liquidity adjustment facility. So if you're having any of the query related to the liquidity adjustment facilities, do let me know at the earliest. And what is the current repo rate right now? What is the current repo rate right now? It is 6.50%. If you're talking about the current repo rate right now is 6.50%. And what is the reverse repo rate right now? Current reverse repo, it's basically operationally it is replaced by the SDF in practice. So it is SDF right now. Operationally, it is replaced by SDF, and the current reverse repo. Otherwise, basically, it is 3.35. So we can say the reverse repo. Otherwise, it is 3.35. And operationally, if we are talking about like in operations, instead of reverse repo, now we do use the SDF rate. We do use the SDF rate. SDF is basically standing deposit facility. SDF stands for Standing Deposit Facility. So RBI accepts deposits without the collateral, and basically it acts as a floor for the LAF now, right? It is standing at 6.25%. So I'm highlighting same. So for LAF right now, these two are used operationally. Clear with it? Clear with it so far? Form A is the report that is to be submitted. Now, after that, it's about the payment and the settlement systems. It's about the payment and the settlement systems. The first one, it's about the RTGS, that is real-time gross settlement system. So it started in 2004 October, and it's real-time basis. There is no netting of the transaction. Like if A did the transaction, it will be settled individually. If B did the transaction, it will be settled individually. So there is no netting of the transaction. Like in the case of the NEFT, there is netting of the transaction, and there are 48 half hourly batches in case of NEFT, but not in the case of the RTGS. It's on a real-time gross settlement basis. And what is the minimum amount of the transaction as per the RTGS? It is minimum amount is 2 lakh rupees. So the minimum transaction amount is 2 lakh rupees, and maximum could be anything. There is no ceiling as such. There could be ceiling that could be placed by the bank authorities, but not as such. And further, it uses the Infinite and the SFMS. It uses a Infinite, that is Indian Financial Network, and further SFMS. And Infinite is developed by the IDRBT. Now, what is IDRBT? This is Institute for Development and Research in Banking Technology. And SFMS is what? It is a structured financial messaging system. Why I'm telling you? Because direct questions can be asked related to it. They could be the statement type of questions that like which will be stating that what systems are being used over here. And RTGS is now available 24 by 7, 365 days it is available, right? And the banks are to manage the liquidity. So banks must be maintaining the sufficient funds with the Reserve Bank of India. And further, the RBI basically do provide the intraday liquidity. The RBI basically do provide the intraday liquidity through the repo transactions. So intraday liquidity will be provided by the Reserve Bank of India automatically, right? That will be done automatically. But RTGS is related to the instant payment. Now, then when you do the transaction will be settled itself, and basically you'll be getting a UTR number, unique transaction reference number. That's a 22-digit number that you will be getting for the reference purposes, so that you can get back to the transaction and it should be settled there now. Clear about that? Kindly do confirm if you have understood the concept so far. So RTGS is real-time gross settlement system. It's on real-time basis, gross basis, and it is electronic fund transfer. There is no settlement risk involved over there. It is available 24 by 7, and it is regulated by the Reserve Bank of India. The minimum amount is 2 lakh rupees. There is no maximum amount. It's available 24 by 7. Immediate settlement is there. And further, as per the Reserve Bank of India guidelines, if we talk about the charges, if we are talking about the charges, if the transaction is varying from 2 lakh to 5 lakh rupees, then as per the Reserve Bank of India, for online purposes, if you're doing the transaction, there are no charges for such transaction. If you are doing the transaction online, I'm talking about, right? For online RBI transactions, even if it is above 5 lakh, no charges are imposed if you are doing the transaction online. If you are doing the online transaction, no charges will be imposed upon you. Clear with it? Okay. Then after that, it's about the NDS. The next topic. The next topic that we're going to cover, it's about the NDS. Now, what is NDS? It's negotiated dealing system. It's a negotiated dealing system, and NDS is what? It's an electronic platform, and it was introduced by the Reserve Bank of India. So NDS is the electronic platform, and it was introduced by the Reserve Bank of India. And this platform is actually in India, it's basically used for what? It's basically used for the trading purposes. It is used for the trading purposes. It's used for the reporting purposes, and for the it is used for the settlement of the government securities. Settlement of the government securities and the money market instruments. So NDS is used for the multiple purposes as such, right? So it was introduced in the year 2002, and further the main purpose was related to what? That we want to increase the efficiency, transparency, and automation. So it's an automatic electronic reporting and settlement system. So we wanted to do the automation. We want to increase the efficiency, and so as to increase the transparency. So basically, the auctions can be there on electronic platform now using this NDS, right? So automatic electronic reporting and settlement can be done. It can be performing the online auctions in electronic format, and further trading in government securities can be performed using this system, right? Using this system. And if we talk about the type of the NDS, if we're talking about the type of the NDS, we're having the NDS OM. NDS, that is negotiated dealing system, and OM means order matching, like anonymous screen based trading will be there, right? And one it is NDS original. One it is a NDS original. Like this is basically related to reporting platform. It is related to the reporting platform. And NDS OM is basically screen based trading. That's why I told you that it is used for multiple purposes. It's used for the trading purposes, right? And it is used for the reporting purposes and for government security settlement and money market instrument settlement purposes, right? So multiple instruments can be traded upon this, like government securities, treasury bills, state development loans, money market instruments. These can be traded upon it. And if we talk about the membership, if we're talking about the membership, right? So eligible entities must be maintaining an SGL account or CSGL account. So subsidiary general ledger account, right? Or CSGL account that must be maintained with Reserve Bank of India. So the banks, primary dealers, mutual funds, like insurance companies, those will be eligible for this. Clear with it, right? So SGL is basically directly, that is account directly maintained with the Reserve Bank of India. So when I'm talking about the SGL account, it is directly maintained with the Reserve Bank of India. And when we are talking about the CSGL account, it means that is account that is maintained through another bank. Account maintained through another bank. Right. So even if the account is maintained through another bank, still you can be participating on NDS. The next topic, it's related to the NEFT, that is National Electronic Fund Transfer System. So in case of the NEFT, there is deferred net settlement. We say it to be DNS. Kindly take a note. There is DNS, that is deferred. Deferred means what? There will be delay, not instantly, because it's done on netting basis. What is netting? Let's say A bank is to pay 3 lakh rupees to bank B, and B bank is to pay 2 lakh rupees to bank A. So the net amount of 1 lakh will be paid by bank A to bank B. That is basically netting of the settlement, netting of the transactions. So 48 half hourly batches are there. available 24 by 7. There is no floor amount, no ceiling amount, no minimum amount, no maximum amount is there, right? And all NEFT based enabled bank branches basically can be participating in it. Individuals, firms, corporates, all can be participating into it. And if you're doing the online transfer, so as per the Reserve Bank of India, there are no charges imposed. But if it is branch transfer, so it's basically bank dependent charges will be there. Clear with it? So do like the video and further share the video at the earliest, and simply just do write CAIB. If you want to get the complete pack, complete course related to all the 5 papers of the CAIB, just simply do WhatsApp CAIB and WhatsApp it to the number 83609 44207. I'll be sharing the complete details to you, like, and you'll be getting the full course videos, chapter wise previous year questions, mock test, mega test, PDF notes, each and everything. The case study videos will also be covered, right? So that will be all. Thank you so much and see you again in the next video.